Good morning, everyone, and thank you for choosing Market Briefing analysis of today's financial news. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Financial news, June 19, 2023. Global stocks faced a slight setback on Monday as Wall Street's robust second quarter rally lost momentum towards the end of the previous week. The decline was led by chemical and construction firms in Europe, although banking stocks managed to outperform. Notably, Sartorius AG, a major player in the industry, experienced a significant slump of 15% after issuing an unexpectedly large profit warning. In Asia, Chinese tech companies saw a decline as hopes for further stimulus were disappointed. The rally on Wall Street has successfully erased over a year's worth of losses caused by the Federal Reserve's rate hikes, with stocks, volatility, and the dollar recovering. Despite the immense pressure from a $4.2 trillion options expiry at the end of last week, the S&P 500 index managed to secure its fifth consecutive week of gains and currently sits higher than it was at the beginning of the Federal Reserve's rate hiking campaign. During the latest Fed meeting, interest rates were left unchanged, but a warning was issued about potential tightening in the future. In contrast, Chinese tech companies, including Alibaba Group Holding Limited, JD.com Incorporated, and Baidu Incorporated, experienced declines of over 3%, dragging down the Hang Seng Tech Index by as much as 2.9%. Reports from China's State Council meeting chaired by Premier Li Qiang lack details about potential stimulus measures and their timing. The absence of tangible evidence for support has heightened concerns about a slowing economy, unsettling investors who had driven up Chinese equities the previous week in anticipation of a comprehensive package. Notable events scheduled for this week include the U.S. Juneteenth holiday on Monday, China's loan prime rates on Tuesday, housing starts in the U.S. on Tuesday, and speeches from various Federal Reserve officials. Additionally, the market will be watching for the Eurozone Consumer Confidence Report on Thursday, rate decisions in several countries, and key economic indicators such as Japan's CPI and the UK's manufacturing PMI on Friday. Moving on to other news, Amazon has decided to cancel its Mars conference, an event that showcased advancements in futuristic technologies. Last year's conference featured Amazon's Alexa voice assistant impersonating a deceased relative, but there is no indication whether the event will be revived in the future. In diplomatic news, U.S. Secretary of State Antony Blinken met with Chinese Foreign Minister Qin Gang in Beijing, marking the highest-level visit by an American official to China during the Biden administration. The trip, originally scheduled for February, was delayed after an alleged Chinese spy balloon incident in the U.S. Goldman Sachs has revised its growth forecast for China downwards, lowering it from 6% to 5.4%. This adjustment aligns with other Wall Street banks that have also revised their expectations. China's disappointing economic data prompted rate cuts and stimulus measures to support the economy. Elon Musk, CEO of Tesla, highlighted the significance of self-driving technology for the company's value. Musk believes that once Tesla achieves perfection in autonomous driving, Tesla's shares will soar, enabling Tesla owners to transform their cars into robotaxis. Before we continue with our analysis, we'd like to remind you of your support for our channel Market Briefing analysis of today's financial news. If you're enjoying this video and find our content useful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and bring you even more quality content. Now, let's get back to the financial market news and the latest updates. Bank of America's chief investment strategist, Michael Hartnett, admitted that bears like him have been proven wrong. While he believes there are factors that could sustain the ongoing stock market rally, he expressed concern that it could lead to a significant rally followed by a substantial collapse. In the U.S., major indexes closed lower on Friday, with the S&P 500 down 0.37%, the Dow Jones Industrial Average sliding 0.32%, and the Nasdaq falling 0.68%. Despite the dip, both the S&P and Nasdaq reached their highest levels since April 2022, reflecting the strength of the current rally. Microsoft's stock reached an all-time high of $342.33 per share on Friday, thanks in part to its early integration of artificial intelligence, AI, into its products. Microsoft's shares have risen more than 43% this year, drawing comparisons to the tech giant's impressive performance during the 1990s. However, this also raises concerns of a potential bubble, as the dot-com bubble burst shortly after Microsoft's stock skyrocketed. As we wrap up this market news update, stay tuned for further developments in the global financial landscape. Some of the main moves in markets. Stocks. The Stoxx Europe 600 fell 0.5% as of 10:21 a.m. London time. S&P 500 futures were little changed. Nasdaq 100 futures were little changed. Futures on the Dow Jones Industrial Average fell 0.1%. The MSCI Asia Pacific Index fell 0.6%. The MSCI Emerging Markets Index fell 0.7%. Currencies. The Bloomberg Dollar Spot Index rose 0.1%. The euro was little changed at $1.0927. The Japanese yen was little changed at 141.89 per dollar. The offshore yuan fell 0.4% to 7.1577 per dollar. The British pound was little changed at $1.2811. Cryptocurrencies. Bitcoin fell 0.4% to $26,379.34. Ether fell 0.5% to $1,721.04. Bonds. Germany's 10-year yield advanced 2 basis points to 2.50%. Britain's 10-year yield advanced 4 basis points to 4.45%. Commodities. Brent crude fell 0.3% to $76.41 a barrel. Spot gold fell 0.1% to $1,955.79 an ounce. In conclusion, we'd like to thank you for watching Market Briefing analysis of today's financial news. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more fascinating news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.